Hello everyone. Today our topic is about the Bitcoin demand is booming, Bitcoin supply is shrinking. In brief, Bitcoin's growing demand is resulting in a supply crisis. According to the Glassnode CTO, the total amount of Bitcoin exchange has fallen 20% this year. But he said this shouldn't prevent the regular investor from buying in. There are two key factors that affect the Bitcoin price: supply and demand. And why the available supply have been shrinking, demand have been rapidly growing up. A traditional investor and some company like MicroStrategy have been flowing into the market, buying up the huge quantity of the Bitcoin, increasing the demand. At the same time, the data show that the amount of Bitcoin available on the exchange have been declining massively, and this only affecting the market. Bitcoin is in a supply and liquidity crisis. This is extremely bullish and highly underrated, Glassnode CTO said on the Monday, adding, I believe we see in the significantly reflected in the Bitcoin price in the upcoming months. This year, Bitcoin has risen from the low of the 4,000 in March to reach a new high above 24,000 in the last week. A 500% rise. Here, a close look at the two factors that might be causing this momentum. Bitcoin is having a supply crisis, while the total amount of Bitcoin is increasing over time as more is mined every day. The amount of available supply on the exchange, otherwise known as a liquidity, has been declining, and this makes it harder or more expensive for a new investor to buy Bitcoin. According to Glassnode, the supply of the Bitcoin held on the exchange had dropped 20% this January. This is a trend that can be seen across all exchanges. The Bitcoin may have sent away to long-term storage to the custodian store solution or for the larger investment funds, but usually it's been less available to trade. In fact, less than 13% of all Bitcoins in existence is currently held on crypto exchanges and available to trade. Glassnode also tracks the amount of Bitcoin that's liquid, freely available to trade as opposed to liquid that is held on the exchange and not available to buy. Here too, the amount of the liquid Bitcoin has been declining, with just 12% of the total supply remain as liquid. Illiquid and trade spend less than 20% of the BTC key received, acting as supply sink in the network. Just as less like that and more information about the next one is about the growing demand for the Bitcoin and increasing a number of institutional investors embracing Bitcoin has increased demand. Thanks for your listening. Merry Christmas and Happy New Year.